Welcome to Daily Market Briefing. I'm your finance reporter, here with the market setup, sector rotation, and the headlines that matter before the next session.
Welcome to your Daily Market Briefing for 2026-03-27. The session turned on. The market is starting to think the Federal Reserve's next move is raising interest rates. Yahoo Finance, with traders watching SPX minus 1.67% and leaning into strength from energy, consumer staples. Here is the broad market snapshot. S&P 500 down 1.67%, Nasdaq 100 down 1.93%, Dow Jones down 1.73%. Next, the ETF curve set shows where relative strength and weakness developed through the session. Leaders were gold plus 3.51%, energy plus 1.69%. Laggards were software minus 3.59%. Consumer discretionary, minus 2.89%. Across global markets, the session leaned risk-off globally, with broad market retreat across regions. Asia was under the most pressure, with Japan and Shanghai leading the retreat, while Australia and Oceania held up better than the rest. Stepping back, the broad market traded with a weak tone, as SPX closed minus 1.67% and NDX finished minus 1.93%. Leadership came from GLD, XLE, while pressure showed up in IGV, XLY. On the S&P 500 heat map, leaders were energy plus 1.69%, consumer staples plus 0.79%. Laggards were software minus 3.59%, consumer discretionary minus 2.89%. Fed thinking is still central to the tape, and releases like upcoming macro releases are being used to reprice the policy path. Firmer data would make it harder for the market to lean into quick easing hopes. Commodity action was split. Crude oil led, while gold lagged, so the move looked selective rather than broad-based. The index board leaned lower, with Nasdaq carrying the weakest tone and Nikkei holding up best. Megacap curves were mostly negative, which points to a broad tone move more than a single name story. Forex showed a risk-off currency tone, with the sharpest move in AUD/USD and the best relative strength in USD/JPY. Crypto remained under pressure, which helps confirm the broader market risk tone. Bond curves suggest yields were mostly rising, so rates still mattered for the session. The main focus stayed concentrated in energy and consumer staples. The pressure point remained software and consumer discretionary. Tomorrow's setup comes down to the next macro events, yield direction, and whether today's leadership can hold. Follow-through on the market is starting to think the Federal Reserve's next move is raising interest rates. Yahoo Finance also matters because the tape is still sensitive to macro headlines. That is the key takeaway for today's market. The broad market traded with a weak tone, as SPX closed minus 1.67% and NDX finished minus 1.93%. Leadership came from GLD, XLE, while pressure showed up in IGV, XLY. Keep watching policy signals, index leadership, and the next macro catalysts. Today's finance headlines centered on Fed expectations stayed front and center. Geopolitical risk kept pressure on sentiment and energy. From Yahoo Finance, Fed's Jefferson sees higher inflation from Iran war near term, signals toward holding rates steady. Traders will use it to reprice the policy path and any pressure on long-duration assets. Here are the key points from the headline flow. Rate expectations can ripple quickly into tech, yields, and broader risk appetite. Traders will use it to reprice the policy path and any pressure on long-duration assets.